This is Randy Finney with Right Side of the Chart, and this is a mid-session update for Friday, September 6, 2019. I wanted to just do a quick overview on the broad markets. I'll talk about the QQQ trade. I'll reinstate the stop on that trade today, and what I'll probably do is just set it over the recent high. This is just a 1-minute chart here. You can see levels that have served for day trade. There's been day trading ops here. One of these, or a couple of these, I posted in the trading room yesterday. You downtrend lines, uptrend lines, and that's what's going on when stocks are in a trading range. Day traders come out and play, and that's when you can pick up a few bucks there. But the bigger picture is this: since we gapped up yesterday and ran, we faded, a good part of the rally, and we've pretty much been moving around. There it is. That's a trading range. Again, this is yesterday's gap up. There's QQQ in here, so this is kind of similar to that bigger trading range we just had for the month of August, except in a smaller scale. So what I'll probably do is just reinstate the stops. I'll tell you what, with this QQQ trade, personally I took the precious metals as hedges recently, and then I've been long short the last couple of days with the volatility, making 10 times what I would have made on on the QQQ or NQ trade. So it's almost becoming insignificant now at this point to me. But with that being said, there's still the potential. So what I'll do is I'll come out with a post today, and again, it'll probably be on the daily close, just somewhat above that recent high. Like I said yesterday, in percentage terms, that trade's hardly underwater from where we entered back, not a month yet, but close to it now. We entered, was it right here? If I recall, yeah, it was on that day, that big pop. We shorted right at the top of that body on that candlestick, and so that's where we're at now, which is again maybe a couple percentage points. Yeah, about less than 2%. So I'll put a stop there. And what I'm thinking is, look, if this thing reverses and we fall back into the range, there'll be plenty of opportunities to add it back. It's more of a, like I said, with the recent trading range and trying to, carrying into the weekend, anything can happen. We can gap up above on the weekend, and that way, we might extend the small loss. So that's what I'm thinking about doing, is a stop right above here. I'll get that out to you guys later, and of course you decide what to do there. But we're not going to have, as I said, we're not going to have resolution, or at least not a failure of this breakout today. That's almost a certainty. We'd have to fade real hard into the close, and even if we did, they'd probably step in and buy any pullback to the top of the range, which at that point would just be a back test. So I think it's going to be until next week. So enough on that. Let's take a look here and see if there's anything in the 60-minute charts worth noting. The divergences on QQQ and SPY have been burned through right now. So, however, we still have those divergences I pointed out on the futures. So let me get to that chart. Those charts, I should say. There it is. There's NQ right here, NASDAQ 100 futures. And we still very much have the divergences in place that I mentioned yesterday. There they are. We broke the trend line, and we've kind of been trading sideways, as I showed you in the video this morning. So not really any impulsive downside. We're not going up either. It's that same trading range I just showed you on the 1-minute chart of QQQ, complete sideways trading. So and like I said, there is certainly the potential, and I would almost lean this way, just the way, my read on the PPO. Usually when you come down like this, you get a distinct low and some clean separation, and doing so would bring us up a little bit like this, and then maybe give us divergence at that high, right at the resistance level 79.25 or so. It's a pretty decent level on NQ. So that's what I'm doing now, or at least looking at right now. Now we'll see. The day isn't over yet, so maybe something will happen before the close today. But that's what NQ looks like. And right now, again, I don't see any catalyst. Powell's speech is already out of the way, as is his Q&A session. There's the divergence, as you can see on ES, and same story. ES could push up. You have some pretty decent resistance around 3,000. ES, by the way, guys, is the S&P 500 E-mini futures. So there's our next resistance level, and it could certainly look like this. And that's why right now my confidence in the very near-term direction is not very high. And if nothing else, I'm probably leaning towards a little drift up. So again, my MO recently continues to be, it's almost more of a hedge. It was a hedge, and then as I mentioned, we had, I told you I was going to sit tight on them, and that was here yesterday. We dropped overnight, a big drop, and we got extremely oversold. So that's why I covered this morning, and that's why I put those charts out in pre-market showing you they're probably a good chance for a bounce. We have not been this oversold on the 60-minute chart, as you can see. This is silver, by the way. I know I'm kind of rifling through charts here. If I don't mention, it's up in the corner there. So that was it. So there was a long trade to be made. We bounced up right into resistance. It's a very tradable security recently. From resistance, then I put an additional front page post up saying, look, this is objective shorting op here, and the amount of money to be made so far, that was a drop of what, 4.25% so far. Every silver contract SI represents about what is it, about $90,000. So what is that, 30, several $1,000s per contract right there in just a day trade. And also a move that dwarfs, that's a 4% move. On that QQQ short trade that we have, we went profitable. It's a little underwater now, but we shorted here. Let me turn off everything. And we shorted right here, somewhere in there, and we were positive on that trade by about that right there. There's 4.16% shortly after entering that. And so that's something we've been able to make in just one day on silver, just shorting that high there. So again, there's more volatility right now in the metals. The volatility is sort of abating in the stock market. It can expand in a heartbeat. If we turn around and next week and we fail this breakout and we fall back into that range, we could get that waterfall selling. And if the QQQ short trade is stopped out, again, we can jump back into it, because if the breakout fails, I'm looking for a lot more downside. And as I said, ultimately I'll put out reinstate the stop, and it's completely up to you. And it also depends on your entry. I realize that the official entry on the trade, which was right here, may or may not be your entry. But this is where I've said for last month the most objective entries were on the bounce back to that range. And I also mentioned personally, although it wasn't the official trade, I scaled in from the midpoint of the range. So I started scaling in. I was short that move. I mentioned reversing long right there on the 200, and then closing my longs at the midpoint, and then scaling in to swing positions, and then a couple occasions there. And so again, those are my swing shorts. I'll keep them hedged for right now. I'll probably go home over the weekend short, on those swing positions. But again, with this official trade, I'll probably put a stop and leave that up to you guys, whether you want to use that or a different stop. All right, back to silver. It dropped about 4.5% from that entry right there, about oversold, bounced back to resistance, and it overshot this level again. So it continues to respect this level. I've had this on my chart for a while here, 1825. That's 18249. We'll call it 18 and a quarter. And so we're back above it again. So that's a level to watch. If we get a 60-minute close below there, another drop, which I'm leaning towards, especially if the market drifts higher, like I just showed you. This is my preferred swing target zone, somewhere in here. Probably come on down all the way to 17,640 or 64. So possibly reverse there at 17,905. So this is what I call a target zone. And what I'll just do, if we get down there, I'll just start trailing stops to let it ride down there. But if we happen to reverse off that level, I'll have a stop somewhere, so I won't give back a lot of profits again if we get there. All right, that's silver. I mentioned in that post too that gold, so I said, was coming up and had rallied back. I didn't put a chart up, but I told you guys it. And I've shared, this chart was in last night's video too. 1535 right there, and I said so gold also offers an objective shorting op, and boom, that was turned on a dime right there. Reversed right on cue. Along with everything else, you can see, very, very nice level here. A lot of reactions to define that former support, now resistance level. And again, so this is a comparable swing target right here, as I mentioned, for gold. Very nice support shelf. So I have a buy to cover limit ordered slightly above that. Where is that? Let me look at another monitor. 1504.60. And if it gets down towards there, I'll maybe just set a stop above too, in case it reverses just shy. But that's what I'm holding out for now, just above, a couple points above that 1501 ish support level there. And of course, it should have no business getting back much above. I can show you right now. Put a line there. There is a resistance level right here, and that comes in about 1544. It really shouldn't get above there, and if it does, look, there was a big divergent high. It could come all the way up here and make a back test of the trend line. A lot of possibilities, but again, this is kind of what I'm leaning towards right now. And so far so good on the reversal in gold. And then platinum is the other one. I'm watching a lot of movement there. And it also on the last post I made on the front page, it was right here, ran up to this resistance level, and that's where I said offers another objective short. The first objective short obviously was the breakdown here of the well-defined uptrend line, divergent high, everything else. Actually had a early short entry there on a small wedge pattern, and then this is the most recent objective short. And so far from there it dropped, what was that, about almost 2% on platinum. You can see the levels here. We already hit this 930 target earlier, and if we get another thrust down in the metals, 912-ish, a little above, that would be the next target there. Okay, and let me leave it with this chart here. This is the NQ 15-minute chart. I posted this one on the front page. I believe it was on the front page. Yes, it was, along with those last posts with the precious metals. And what you have here is a pretty well-defined trend line coming in right here. And you have a nice support level right here at 70, what is that, 78.40 right there. We took it out, we ran down, kissed it. I mentioned there was a trade to be made for a bounce trade. I figured we would get rejected off this downtrend line, but we didn't. We went through there. So that one, you know, I had a short going into there, reverse there, and tried another short there, which I got stopped out of. So 2 for 3 today. But right now, again, if you look at the bigger picture, this is it. We're locked in a trading range, same trading range I just showed you on the QQQ 1-minute chart. And that's it. So this is a level to be respected. See, that trend line was broken, but you can notice how the candlestick body, the fat part, closed right back above it. And I talked about that earlier today. This is a 15-minute chart. You had a 15-minute candle, broke, but snapped right back and closed above it. So that's another reaction. I look for the most number of candlestick shadows or bodies, either the skinny part or the fat part, and that's what defines this trend line. So very well defined. And again, if we break it, have an impulsive break, that should be the catalyst for a move back down to the bottom. And then of course, if we break the supports, now we have another reaction. Since I showed you the support level today there at 78.40, that would and should open up the door for a downside move, you know, if that level goes with conviction, especially a 15 or 60-minute close below it. Likewise, a break above the pattern, same story. Impulsive breakout, solid, you know, 15 or 60-minute close above should do the trick to give us a little more upside to those resistance levels I showed you earlier. That's it. So let's wrap it up here. Like I said, boring day right now in the stock market. Boring since yesterday afternoon. Most of the move was in the morning, and since then we've been trading sideways. And I thought we'd have a little more volatility with Powell's speech, but we didn't. So that's what we're looking at here. So to be continued next week, unless anything big happens in the final 2 hours of trading. It's 2:04 p.m. right now as I'm wrapping this video up. So obviously, if there is, I'll let you guys know. This has been Randy Finney with Right Side of the Chart. Have a great weekend.